Insight. Today's talk focuses on the fact that the street just came out with the announcement that if Tesla only has 3,000 to 5,000 Model 3s to show in the quarter ending January 1st, it could be very bad news for the stock. And I'm here today to introduce some logic that suggests that this is totally ridiculous, and in fact that the stock could jump dramatically. And this is the last gasp for the shorties or hedge funds that are short to try to get a win before Tesla stock starts to take off. This is Greg for Tesla Fan Insight. Thanks once again for joining us. If this is your first time on the channel, please take time to like and subscribe. If you're returning, welcome back. I think you'll enjoy our conversation today. So what happened is there's a guy named Jim Cramer who owns something called TheStreet.com. Jim is a former hedge fund manager who chose to give that business up and sort of get into the news business. And so he's very influential in the movement of stock prices based on his knowledge and experience. In his latest Tesla report, he came across to announce that if Tesla's numbers are light, it could really hurt the stock dramatically. And I don't know if you guys have noticed, but Tesla, even with the bad news that the Model 3 was delayed, was in a very interesting position because the stock price went down to around $300 and started rising again. So the question is, what's going on? The answer that I want to present has sort of three layers, if you will, in baking a cake. The first layer is looking at who are the people who own the stock currently and what are they thinking about in terms of Tesla's stock. The second layer is, to this cake, is the fact that Tesla's circumstance isn't impacted by any major competitors whatsoever, so that cake layer is fine. The third layer of this cake is that there are some explosive numbers that are going to be coming out of Tesla over the next couple of years that I think a lot of people can see. So the first part of our discussion is really aided by a firm called Gallileo. I had a chance to view, and I'll try and put a clip to the video on this person because we finally had viewing of an analyst with some awesome logic as to how and why Tesla really makes sense right now. The most interesting part of a lot of analysis that he did was he pointed out over the last 7 years, Tesla has gone from $127 million in revenue to $11 billion in revenue in that time frame. And so if you do it on a per share basis, they've gone from like $1 in revenue to about $63 per share in revenue in that time period, which is a 93% compounded return on growth at least. He further went on to indicate that what's happening with Tesla right now is that the build out of the Model 3 facilities allow Tesla to do things like there's a dealer network and there's a supercharger network. So all of a sudden the Model 3 will become another vehicle that's being sold within the current structure of sales facilities of Tesla, which means that the infrastructure that's been built has been expensive. But as you build it out by adding new products to that infrastructure, all that infrastructure funding makes sense. He did indicate that if you just stop the Model 3 right now, the company wouldn't be profitable just for a Model X and Model S because the infrastructure constructed to handle more products like the Model 3 is too large for just, for the structure to not be profitable currently. But what the revenue plans are, et cetera, are consistent with the company continuing to grow nicely and ending up with a lot of profitability going forward. But there's an issue of will folks be patient in that process, and he's a patient investor in terms of getting to where the plan is to go. And I think that it's an awesome analysis of what Tesla's really about, rather than everyone jumping around trying to figure out, are they going to be profitable this quarter or not, and using that as a measure of, if it's a good or bad company. So I bring all this up to you because one of the big discussions has been, well, what's going to happen with the stock, and will it have a dramatic fall? And I actually thought myself that we'd see a nice dip in the stock price were they not able to deliver on a Model 3 or some profitability numbers that the street seemed to kind of want to see. And I really don't think it matters. And here's why. I put a little graph up at the beginning to show, in general, what the ownership looks like. And the answer to this is why I think the stock prices turned out to be fairly stable. When you have institutions representing approximately 60% of your ownership, then you add into it the fact that Elon Musk and management owns about 30% of the company. That's about 90% of the stock that's held. Now, some of the other data points that are out there include the fact that if there's only 10% that's non-institutional money, and I believe 25%-ish of the float of Tesla is actually being shorted, some of those institutions are loaning their stock out so that the hedge funds who are shorties can short the stock. But what this really leaves is a very small amount of stock that's lurking out there for what I call hot money. So that means people who want to get in or out relative to the current earnings, etc., is definitely part of the stack of investors that are out there. But Tesla actually has a really strong group of not selling owners that are happy with what's going on, and they ain't selling. In fact, what they're doing is on dips. They're buying the dips on the stock, which is why I'm not worried about the numbers that come out. So the suggestion that the street made, that if everybody knows they've done 2,000 cars, what the street is saying, if they haven't done 5,000 cars, that could potentially tank the stock. And in my mind, that's ridiculous, because bottom line is that there's a whole bunch of institutions and Elon Musk's control of the stock that he's not selling. And all those people ain't going nowhere. And in fact, they're trying to buy in more. Now, there's another problem that's going on in the markets right now that I'm really fascinated by. And that is that if we go back and look at the growth numbers that were just spoken about, one of the problems that's happening is, let's take an institution like CalPERS, which is the retirement fund for the state of California, which is one of the largest in the world. Now, that fund has a problem, and the problem is every month they take in about $300 million, maybe $500 million that has to be invested. The question is, what do they do with that? The answer, they actually have to find stocks that represent future growth that they can invest that in. Now, multiply that by the number of hedge funds or pension funds around the world that are in a similar position. And what they end up doing is looking for growth stocks, usually in technology, that they can get into that represent ways to not only get future dividends, but also they want to buy growth because they can get growth in the stock price to go with potential earnings. And in a low bond yield environment, there are a lot of people looking for growth that they can invest in. That's, I call it big K. It's called big cap growth. So that is large capitalization companies that are growing that represent a risk profile that people can live with. And Tesla, I think, is the perfect growth stock for them to be investing right now in. So So basically what's happening with Tesla is that it's a great growth story. There's a lot of entities that are starved for reasonably priced growth, and reasonably priced is based on what is the price of the stock relative to its growth rate. And I think Tesla is reasonably priced with a huge amount of potential coming down the pipe. So as a result of all this, I really think we're in a position right now where Tesla's a great buy, and I believe, therefore, that the stock price is actually going to move nicely up once all the deliveries of Model 3 for sure have started. So I think this is an exciting prospect for everybody who owns the stock or wants to see Tesla do well, because I think they're in a power zone where once the Gigafactory is finally rolling with the Model 3 output, we can now see the beauty of the system that's been set up by Tesla. And I just think it represents some awesome potential. I think this is the last gasp for the hedge funds, because for those who shorted the stock, if we have Model 3 production coming on now, it totally screws up their plan of Tesla stock tanking based on inability to get the Model 3 out or meet some of the goals described. So I want to thank you for taking time out. This is Greg for Tesla Fan Insight. This brief discussion today. I look forward to our next talk. Tschüss.